Thank you for attending. This is Seewing Yee from the Yee Real Estate Network, and it's my privilege to introduce you to my partner. Before I will mention his name and his organization, I'm going to say that this presentation is all about opportunity zone investing. So we are in the front end of this very unique opportunity available out there. What triggered my motivation to bring this so-called product to our investment database is that not only has some great tax benefit, but at the same time is more about the tax benefit. It's all about the core investment itself. Does the investment itself make sense? Is it it's gonna potentially make people money long term so is again, it's not all about tax benefit. But one quick thing I want to mention also, back in the old days, back in 2005, Jeremy, I'm sure you have gone back as far as back as I did. Back
I do.
In the early 2000s, it's such a coincidence. My organization, we presented the GO zone, the government opportunity zone, back in when the hurricane hit Louisiana and Alabama, those areas. The government provided a tremendous tax incentive for investors
Hmm.
to invest in the GO zone, government opportunity zone. And now we have a different terminology. We talk about opportunity zone. So, but
Hmm.
I know every investment situation is different, right? Different time frame, different location, different unique circumstances, and this opportunity zone is no different. So, well, Jeremy will talk about it throughout the presentation, and then after this, then investors out there have an opportunity to evaluate your own goals and objectives, your risk tolerance, and then consult with your tax and legal advisors to
Hmm.
go over your situation and truly understand and make an informed decision before you invest. So this is my disclaimer. I don't know whether Jeremy want to do any additional disclaimer before he begin, but without further ado, I'm gonna present to you, Jeremy Sisson from Evan James and Associates. And well, Jeremy, take it away. This is your presentation. Go for it.
Well, Seewin, thanks for having me. I really appreciate it. Giving you a call in from sunny Florida. And it's sunny for a couple of different reasons. Physically, everybody knows that sun, it's very hot in Florida, and today is no different. And number two, figuratively speaking, it is very sunny for commercial real estate here in the state of Florida. People are flocking here left and right. The cap rates and the cash on cash returns are strong. I'm the CEO of Evan James and Associates, which is a full service commercial real estate brokerage headquartered in Orlando, Florida. And we do deals, acquisition, disposition, tenant leasing, property management, debt sourcing. We also do owner's rep and project management for clients, small, medium, and large. We have Fortune 500 companies that we represent, all the way down to a local mom and pop who wants to sell their retail strip center, on Colonial Drive here in Orlando. So we do a little bit of everything. And Seewing, at the end of 2018, a lot of our investors and a lot of people who we've done business with over the years, and I've been doing this almost 20 years now, came to us and said, hey, look, you guys have a great reputation. You do great brokerage. You represent us well. Would you be interested in starting an opportunity zone fund, which is going to take advantage of the tax savings, if you will, for capital gains that came about at the end of 2017 with President Trump's new legislation, our new law. And we said, of course we would. We looked more into it. We talked with our attorneys and our investors and our CPA firm, and we agreed that we would start a Fund 1 for $125 million. And with that fund, we plan on investing in opportunity zones. I believe there's 427 of them that have been designated by the Florida governor just this past year. And we will be putting money into these opportunity zones. And I don't want to get ahead of myself because I'm going to talk a little bit more about what an opportunity zone is during the presentation. So I kind of just wanted to start there. And a couple of things that I want your investor groups to see is there's a lot of opportunity zones that are popping up. And the one thing that I'm going to share with them, and the piece of advice is, if you're going to go with somebody, if you're going to invest in an opportunity zone, go with somebody, and if it's not us, that's fine. Go with somebody who has an experienced executive leadership team. Go with somebody who has a board of directors or an advisory board that they can rely on as they're doing their projects and their deals for feedback. Someone who's going to hold the executive leadership team accountable. Go with somebody who's focusing on a triple bottom line approach rather than just the profits of each deal, because ultimately, if you serve the community, you'll have a sustainable, long-term benefit financially as well. And the deal will be prosperous and the portfolio will be prosperous. So you want somebody that's going to support the environment, focus on sustainability, and then have just a strong roster of projects that are on deck that have great returns. So if you're going to be looking for an opportunity zone, there's going to be a lot of them out there throughout the United States. Those are some of the things that you want to look at first. So let's go ahead and jump in. I'm going to go to the next page. This is our why. We obviously named the fund after our brokerage, the Evan James and Associates Qualified Opportunity Zone Fund. And our mission, obviously, is to harness the experience of our leadership team and our board of directors. We're going to be building from scratch. I'm going to show you some affordable housing projects and some others here in a moment that I think you'll be interested in. We're also going to be rehabbing and some existing projects as well. And everything that we do, or at least 90% of what we do, is going to be in opportunity zones throughout the entire state of Florida. So we're focusing on the triple bottom line, which is people, planet, and prosperity. That's kind of our mantra and our mission, if you will. And for people who don't know, the triple bottom line was started by Dr. John Elkington. It's kind of a phrase that he started, and he's known worldwide for his corporate responsibility and sustainability development education. He educates the corporate world about how to be a better corporate citizen. So if you can read a little bit about the triple bottom line here on this page, and some of his interest was, how do you get a corporation to not only focus just on the bottom line and the shareholders, but how do you go about measuring social and environmental bottom lines, which then again necessitates all three portions of the people, planet, and prosperity. So our fund is going to take this into consideration as we build, buy, and rehab commercial real estate investment properties throughout the state of Florida. So let me go to the next page. Seewing, are you seeing the triple bottom line process?
Yes, everything looks good. We are real time. So
excellent. Yes. So I'm going to kind of go through the flow chart of how we're doing these things. The first step, obviously, is a project is located in an opportunity zone. Our brokerage and our team took about the last 4 or 5 months and put together quite a portfolio of properties that are ready to go. Then we evaluate them through the triple bottom line matrices. Obviously, we're going to do some in-depth feasibility studies. We're going to check the market, a little bit of due diligence. Then we're going to, as the brokerage and as the general partner in this fund, we're going to look at, let's say we look at 100 projects, which we have throughout the state of Florida. We chose about 12 of them that we really like, and you guys are going to get to see every single one of them here in a little bit. So we chose 12 that we know we can start with day one as money starts coming into the fund. The next step is, obviously, we're going to take it to our advisory board. Our advisory board will be meeting on a quarterly basis, and then they'll also be available throughout the entire process of building. The entire time this fund exists, our advisory board will be available to us. A lot of them, and you'll see their profiles here in a little bit, a lot of them are engineers, architects, general contractors, folks who have closed $3 billion in REITs before. We have very seasoned people on our board. So we have people who are not only going to advise us whether or not we're doing good deals, but they'll probably be involved somehow as well. Attorneys that do these sorts of deals. Then we'll get a feedback from the board members. The executive leadership team will then revise the updated project list based on their input. We may keep some, we may pitch some deals, and then we'll look at our project benchmarks, what we're trying to do. We'll start interviewing GCs and everyone that we need for the project. We'll go ahead and deploy funds to buy the land outright, and then we'll start the process. So, and then obviously we have a third party CPA and law firms who will provide ongoing advice to not only to the general partnership and the brokerage, but to anybody who's investing in this fund as well. And we have their information, so we'll show you that in a second. So for those of you who don't know, you may be thinking, what is an opportunity zone? I've heard this in the news. Maybe I heard somebody at work talk about what this is. And it's basically, and I alluded to it earlier, it comes out of the Federal Tax Cut and Jobs Act of 2017. Their goal was to encourage long-term investment. They wanted to create new money going into these areas of opportunity throughout the country. And in exchange for new money going into these zones, they're going to allow investors in these funds to, if, let's say, for example, the money stays in the fund for 10 years, you can literally have a zero basis on your capital gains, which I don't know any of our investor partners who say no to 0% capital gains, right, Seewing? Would you say no to 0% of your capital gains?
No, I don't think so.
And you know what? If somebody doesn't even know what a capital gains is, you know, maybe they're not the right person. But I've never met anybody that said, I don't, you know, charge me 15–20% on my investment. No one wants to do that. So these zones are specifically designed to help individuals save some money. Okay. At last count, the IRS and the Secretary of the Treasury has all certified everything. Every governor in all 50 states have fully certified and designated opportunity zones in their specific states, and Florida is no different. So we're going to be invested in $125 million in the state of Florida, and then going from there. Now, here is a map of all the qualified opportunity zones throughout the state of Florida. Obviously, we're going to drill down here in a second into some primary and secondary markets, but I just wanted you guys to see the overview of what the state looks like. As you can see, there's a lot of opportunity throughout the state of Florida. So if you look here at the primary markets in Orlando, Tampa, and St. Pete, anything that's green is an opportunity zone. And if you notice on the Orlando map, we've got the Pine Hills area just west of downtown Orlando. Just south of Orlando on that map is the Soto area of Orlando, where Orlando Health Hospital is at. These areas are already having a lot of development in them. So to put an opportunity zone in these areas, it's almost not even necessary, but it's a benefit because developers are already there. So we're going to go into the areas where there's a path of progress. And the same thing with St. Pete, Clearwater, and Tampa. And then we go over to South Florida and Jacksonville. That wraps up our 4 primary markets: Tampa, Orlando, South Florida, and Jacksonville. You can see the green areas here on this map. There's a lot on the coast, which is always good. Everyone always likes an oceanfront property. And then we've got some secondary markets that we've identified as a brokerage that we would like to put some investment properties in or rehab. Tallahassee is strong. It's a state capital. There's always movement there. Cape Coral has been coming on strong. Lakeland is pretty much a bedroom community at this point for both Tampa and Orlando. It's right on I-4, right in the middle, and it's been growing leaps and bounds. And pretty much the entire city of Lakeland is in an opportunity zone. Same thing with Gainesville. Anybody who's familiar with the Florida Gators is in Gainesville. And then we've got Pensacola up in the Panhandle. So that's always a resort destination location. Moving on, we're going to talk a little bit about
Jeremy. I'm sorry, Jeremy.
Yeah.
Can I interject one quick comment?
Sure.
Sorry to interrupt your flow, but just so you know, Jeremy, since I started my network back in 2004, my network has been promoting Florida for the entire time. So this is I'm very well versed about the Florida opportunities all these years, and my network has been promoting mainly Central Florida for many, many years, including right now. So yes, my investors are very much aware about the path of growth about Florida. They have purchased many properties through our network. So your presentation about Florida are not strange to us. We totally understand. so
We're
so
we're on the same page. I love that, Seewing. Good.
oh,
Good to hear.
absolutely. You may proceed. Sorry to bother you.
Yeah, no worries. So it's good to see we're all on the same page, and I'm glad to hear that. It is definitely a state to be in. We stay very busy as a brokerage, representing a lot of clients, whether they're here or out of the state. So we've hired Hessel and Weiler, and for those of you who are not familiar, they serve 25% of of the top 100 privately held companies in Central Florida. They're always at the top in terms of Southeast United States CPA firms. So they're very good at what they do. Let me show you some of the private equity groups that they've worked with in the last 24 months. I'm sure a lot of you have heard of Blackstone Group, KKR, Stonehenge, Trivest. You can see it here on the list. They work with a lot of top individuals, and they're here for everything in terms of our tax strategy, okay, for our funds. This is a team of CPA and audit experts. We've got Mitri, Tom, and Ricardo, who have been specifically assigned to Evan James and Associates. You can look at Mitri's his resume here, his CV. He's got his master's and his bachelor's in accounting. He's a CPA. He does a lot of work, private and public sector. He's been doing private equity groups for quite a long time. Same thing with Tom. Tom works more in mergers and acquisitions. He's an audit expert. He does venture capital firm deals, private equity funds, so he's familiar with this process. Same thing with Ricardo. Ricardo works with private equity groups quite a bit, investment funds. He does a lot of construction deals too, and he does middle market clients like us. So we feel that we've chosen the right CPA firm and the right team to represent this fund. Now, this doesn't go to, you'll still have your own CPAs, obviously, but these guys and this firm are representing the fund. So you will have everything that you need in terms of tax compliance for yourself and for your company. Now let's turn over a little bit to the fund diversification of the asset classes. We're going to be focusing a lot on anything medical related, medical offices. Obviously, affordable housing is pretty huge. I'm going to show you guys some new inventory that doesn't exist in North America yet. We have the exclusive on it, so I think you'll like that. And then we're going to mix up the actual full portfolio, so that way we have a nice basket of money covered in different commercial real estate niches. And so everything I'm about to show you are projects that we are going to do that are located in opportunity zones somewhere in Florida. And before I go through this, there seems to be a little bit of feedback. I don't know if you want to put it on mute. I'm hearing myself.
Oh, okay. All right.
There's just some reverb before we move on.
I don't even know how so you want me to put on mute, right? Is that what you're saying?
If possible, and if not, no worries. There just seemed to be I was hearing myself.
Yeah, I don't even know where's the button to click to mute me. Oh my goodness.
Well, while you're looking for that, I'll kind of go through some of the affordable housing. So what you guys are looking at doesn't exist in North America. These properties are primarily in the Caribbean and throughout Europe and some other continents. We're bringing this inventory and this affordable housing inventory for the first time to North America. And for some reason, why can't I move forward? Here we go. Hang on. Give me 1 second.
No problem.
Technical difficulties, they happen from time to time.
Yes, they do.
There we go. Okay. Our affordable housing projects that we're going to be bringing to market are anywhere between 20 and 30% annualized return. So the premiums that we're going to be offering our investors is pretty high. Let's put it like that. We're going to be able to bring these properties, and I'll show you some more pictures here in a second, for less than $1,000 a month per home. And what you're looking at are 4-bedroom, 3-bath, 2-car garage properties. And the mortgage or rental payment on these is around $750 to $800 a month. Now, I don't know anybody, see, when you tell me if you know somebody that wouldn't like something like this for $750 a month, right?
Correct. All day long.
Yeah, all day long. So here's another picture. Here's another shot of this inventory. Obviously, you got the 2-car garage. It's connected to the property. And then we've negotiated with the manufacturer to build each of these for less than $112,000 per unit, completely finished. It's on concrete slab. It can be built in 3 weeks. Because it's steel framed modular housing, there's no inspection needed for 100 years. We don't have to worry about floods. We don't have to worry about Category 4 hurricanes because they are hurricane resistant. High quality materials. There's a European style to them, exterior and interior. And check out the interiors. This is the this is the master suite upstairs in this affordable housing unit. I've had people who live in $1 million homes look at this and say, I want to move here. This is nice. This is the downstairs. You can see the kitchen there to the left. There's a door underneath the stairs that leads into another bedroom. It's very cozy. It's got a cottage feel to it. Here's the bathrooms, very European. There's the bedroom to the left there that is downstairs in these units. And we can also do 3-2s, 2-2s, and the price drops to below $100,000 per unit. I think we've negotiated to $40, $50 per square foot, which is, anybody who's in the contracting business or construction business knows that's extremely cheap. But we're not sacrificing on quality. That's really key here. We don't want to put up just, construct concrete buildings, 3-4 stories, and say, okay, here's your affordable housing. And then, we've got the tax credits. We're not doing that. This is pure market-based. This is us negotiating for the best price to bring this inventory to new markets throughout the Sun Belt. So obviously, you got some other colors here. You can put a pool outside. There's a couple other things you can do. And then you can see the layout here. Take a look at the bedrooms on the left-hand side, which are upstairs. And then downstairs, you got the living area, the kitchen. You got a couple of bedrooms there. Except for upstairs, everybody's got their own bathrooms. So obviously, if you have a porch on the front, you can put a porch out back as well. So this is a different project. This is an eco-friendly housing project. This one we took from a developer who ran out of money. It's an infill here in Central Florida. It's 42 units. It already went through the process with the city to get approved. So we're not really starting from scratch on this one. It's a pretty easy build. Here you can see the infill.
Jeremy, yeah, quick question. Sorry, the previous affordable project, where is the location at? I'm sorry.
The affordable housing projects?
Right, with the location, yes.
I'm actually going to come up to that here in a second in the,
sure.
presentation. Would you want me to wait till we get there?
Yeah, no problem. So sorry. Yeah,
No, it's okay. We have a couple places that we've identified, and we've already started negotiating with the landowners. However, I will preface your question by saying we can take this product anywhere. If we find something in Tampa, a spot we like 10 acres, and we want to put up a couple hundred units of this product, we can do that as long as the city or the county is on board with that. So great. We do have some specific locations that we're going to build on, but it's wide open where we want to take it.
Good to hear. Thank you.
All right. So, yeah, of course. This is a drill down a little bit of site map to what this project would look like, the eco-friendly housing project. Get a look at it there. And then this is a completely separate project. On the east side of Orlando, most people are familiar with the University of Central Florida. There's just been a whirlwind of development, especially when it comes to student housing, because student housing is a little bit different. You can build a 4-bedroom, 4-bath where everybody has their own room and bathroom, and you have a key card. You can charge $500 per student. You can make $2,000, north of $2,000 per unit per suite. And the returns on student housing and from anybody who's built it before is familiar, it's very strong and very high. We have a relationship with somebody who owns a 14-acre plot in an opportunity zone near UCF, which is the second largest university in America, to build almost 400 beds. So I just wanted to show you guys this, that we're going to be doing some student housing as well. It is recession proof because, again, we have a major university. And I'd say this property here is probably 7-8 minutes away from the school. And there's also busing from UCF that takes people to projects like this, student housing projects. So we're not concerned. We think this one's going to do real well for us. This one's on the west side.
Jeremy, so sorry to interrupt you again, but over the years, some of our investors that ask me, are we ever going to offer student housing investment opportunities? Well, this is now we have a chance. So good, good for you. So.
Yes, you do. And this is just the first of many. Obviously, we have a relationship with the landowner, so this one was top priority. This is one of the 12 that we've identified. But my guess is we'll probably have 10-15% of our entire portfolio will be in student housing. So to answer your question, yes, your investors will have a piece of a lot of student housing. Yes.
Great. One quick comment. UCF almost beat mighty Duke in college basketball yesterday. So almost.
Don't remind me. Don't remind me. We literally missed a tip layup, and we could have beat Duke. But here's the thing. I'm a UCF grad. I got my MBA from UCF. So I wanted them to win because it's my alma mater, but I wanted them to lose because Duke is in my bracket, and I have Duke winning the whole thing. So had Duke lost to my alma mater, it would have totally blown my NCAA college bracket. It's 50-50 there.
Yeah, I hear you. Okay.
All right. So the next one that we've identified is another project that was land banked by a developer that we know here in Central Florida. It's on 11 acres. I'm going to show you the next page so you can get an idea. If you look on the top right-hand corner, you see some residential development, and below that yellow is a whole condo community. And this sits on a lake. So we got 11 acres. We can build 250-unit lakeside condos, which will probably do steel framed as well. We'll have our manufacturer develop something specifically for this project. So again, we can minimize expenses so we can pass on the savings as affordable housing. Okay. Any questions on this, Seewing?
Yeah, sounds very exciting so far, Jeremy. So keep going.
All right. So let's look at some mixed use. There's a place called Eatonville, which is just north of downtown Orlando. The entire city of Eatonville is in an opportunity zone. It's very close for commuters for the downtown urban core. We've identified a couple of different 1-acre spots that are perfect for some retail. They're like the back end of Maitland. Maitland's a huge corporate office environment. And so what Eatonville is missing is some eateries and some places like this to where people can just leave work. There's literally only one restaurant. I think it's, I can't remember the name of it, but there's literally one restaurant in that area. Sam Sneed's, I think. It's very high end. So there's definitely a need for something like this. And I'll show you these next couple pictures. They're all the same, where you've got a little bit of mix of retail, you got a little restaurant thrown in, and it would do very well on an acre or two. And these acreages are available right now. Now this one is over by the Packing District, which is the next big development in Orlando. It's on the west side of College Park. There's going to be a tremendous amount of development. Class A is going in there. The YMCA just built a brand new project. I think it was $40 million. They built a new location. So you can always Google the Packing District. But we're putting in 1.25 acres. We're putting in 12,000 square feet of some high-end retail in an urban feel right near in that area. So this is going to do very well for us. This one's down in Tampa. We've got 65% national credit tenants lined up once it's complete. 11,000 square feet, retail strip. Let's see what else we've got. Okay, so heading down to South Florida, we've got a senior housing community. Sits on 4 acres. It's got 200 beds already, 170,000 square feet. And this is the front side of it, so you can take a look. The one thing that we liked about this project and why it made the top 12 was because there's an opportunity to double and maybe even triple on site because it's so large, the amount of beds on this property. So one thing we also liked about it was the cap rate was very strong, and it's cash flowing. I think they have. Let me go back here. I don't have it in front of me, but I believe of the 200 beds, I believe they had 165 beds that were full, and their people had been there for quite a while, and that's huge because you don't want to buy something like this if it's not cash flowing day one, right, Seewing?
Correct.
So parking lot's in great shape. That whole tower on the left-hand side, I think is the portion, if I remember correctly, that needed some rehabbing, and then we can go ahead and fill that up too with tenants. So there's a lot of opportunity here. Our analyzed return on this property was north of 25%, I believe, just on this project alone. And by the way, just to go back a little bit on the affordable housing inventory stock, because we've negotiated such a good price per unit, our returns are in the 20 to 30% range for our affordable housing projects. Just wanted to make sure everybody knew that. This is an independent veterans housing community, 30 beds already. We've already negotiated with the city and Seminole County to build right here on the backside, basically an identical building to double capacity and obviously double the return as well. 50,000 square feet here. I want to make sure our veterans have a nice place to live. This one is a Class A medical office building. It's in Central Florida. Sits on 2.5 acres. We like this project and this property because it's almost 100% occupied. It's got a good mix of national and regional tenants. The NOI on the property is already at 1.2 million. This road here, this main thoroughfare that it sits on, is one of the busiest roads in all of Central Florida. So it's got a lot of traffic. Here you can see some of the interiors of it. Just to give you an idea, this is something that would cash flow for our portfolio and our fund very well day one. Now we move over to Southwest Florida. This one sits on 5 acres actually, almost 60,000 square feet. Has been 100% occupied for a very long time. It's got an NOI north of 400,000. And we like this property there. You can kind of see the outline of all the buildings. It's been kept up very nicely, so there's very little CapEx on this one. And we have some ideas in terms of greenery and bringing that portion, that piece of the triple bottom line to this project, adding some solar to the roofs and that sort of thing, as an example. Next one is a potential call center or a medical office space. As you can see, the parking lot is very nice. All the CapEx is pretty much been covered by the current owner. There's new HVAC, new roof, new parking lot. It sits on 3.5 acres, which we like, 30,000 square feet. It's again in Central Florida. And it is prime and ideal for a medical office space. It sits in between 2 major hospitals here in Central Florida. And if that didn't work out, it's perfect. It's in a perfect location for a call center. Next one I wanted to show you guys was in South Florida. If you look at the north side of this picture, that's an existing assisted living facility. The owners are willing to sell us the one that already exists and all its cash flow, along with the 7.5 acres, which is just south of it. And we could put probably another 70 beds on that property as well. So this is a senior housing assisted living facility project that we really like. The returns were very strong on it. Here's another one down in South Florida. It's got 160 bed ALF. It also has some active living as well. So it's got a combination of both. Sits on 6.5 acres. We like this one because we can build it out to 500 beds. And any strong investor and seasoned investor knows that if there's a couple ways that you can maximize your returns, and building out 500 more beds is absolutely a way that you make more money. Any questions so far, Seewing?
No, you're doing fine. Thank you.
All right, let's move to the next section. We're going to talk about the Florida fundamentals. I'm not going to spend a lot of time on this because your group can play this back later and kind of look at it in more detail. But one of the things that we wanted to look at is geographic location. I've kind of talked about that as we were talking about our specific projects. We want to be near our primary urban core. We want to be in the existing path of progress, like the Soto area south of downtown Orlando, for an example. And then we'll look at smaller markets too, because in a smaller secondary or tertiary market, your cap rates are typically going to be higher. And there is a lot of opportunity zones in the rural areas of Florida too, which we think are perfect for some triple net Dollar General deals and that sort of thing. Quick service restaurants do well in those areas. But we're not going to go anywhere unless it's Florida or in the Sun Belt. You won't see us building anywhere else in the country. You won't see us building in North Dakota, for example. We're going to stay where there's a lot of traction and a lot of synergy. A couple reasons why to invest in Florida. And since you guys have been doing this for so long, I'm not going to spend too much time on this, but we have a growing economy. Our economy and our state is very business friendly. We're very tax friendly. We have no state sales income tax. We have a very low unemployment rate. We have foreign investments, literally every corner of Florida. Quality of life is strong. And there's still a bargain compared to San Francisco or New York or Miami even though it's in Florida, or LA. It's very cheap here, in Orlando and Tampa and others. And so we're also ranked in the world as well in terms of economics. Now, we thought this was interesting. We wanted to pull this up because throughout the Southeast United States, obviously you see Nashville on there and some other cities, Atlanta, for example. But if you notice, the U.S. average is towards the bottom in terms of year-over-year rent growth. But notice Orlando's at the top. Number 3 is Palm Beach. Number 5 is Fort Lauderdale. Number 6 is Miami. Tampa, St. Pete's on the list. So is Jacksonville. So if you look at all the major cities in the Southeast United States, Florida is definitely the place you want to be because you want rent growth, especially if you're doing multifamily. Now let me back up. We chose 4 primary markets that I already went through: Orlando, Miami, Tampa, and Jacksonville. The courtesy of Marcus and Millichap and CBRE, we have some market forecasts and some information on the fundamentals. I won't spend too much time on this because most people can Google this information. And you are already investing in Florida anyway. But like I said in the very beginning, it's very strong and very sunny to invest here. Miami fundamentals look really good according to Marcus. Same thing. Economy's being driven by booming demographics, and there's a lot of trade. Obviously, Miami is a huge port for international travel and trade. Tampa's information is good. Their job growth is above national average. Their house prices are lower by a long shot than the national average. Tampa's got a nice bag in terms of economic steps going for them. They're very consistent and strong year in, year out. Same thing with Jacksonville. Jacksonville's been on the come up for a while. We have a lot of investors who really like Jacksonville. They got priced out of the South Florida market and they moved into the Jacksonville market, and we're still having great returns. So we like Jacksonville as a good market. Now I want to turn over to the executive leadership team for the fund. It's my bio here. I'm the CEO. I've been doing this for quite a while. I've closed, give or take, 1,000 transactions, or been a part of 1,000 transactions in my career. Not only do we have the fund, but we have a huge project, which I'll show you in a second, called Vertical Medical City, that's going to downtown Orlando. It's going to be the single largest senior housing facility in the United States. We'll have 500,000 square feet of professional medical office space that our brokerage will be leasing out. It'll be home to world-class medical research and development facilities as well. I do commercial real estate articles. I'm on the radio and the news quite a bit, and this will give you an idea of where I've been. Not only do I do a lot of business, but I think it's important that to those much is given, they should give much back. And so I've been serving the Central Florida community for almost 20 years, and I was featured as a 2018 Man of the Year, along with 14 other individuals who are making an impact here in the community. So I was kind of excited about that when the Orlando Family Magazine called me last year and said, "Hey, you're on our list." I'm like, "That's great. What do I win?" And they're like, "You don't get anything. You just get a picture and an article in the paper," which I was joking. I don't really want anything. But it kind of just speaks to the things that I do. I do a lot with the veterans here in Central Florida and in the state of Florida. I'm part of FAVOB on their board of directors. And I was also on the board of the Guys with Ties, which is a group of business executives who host parties every year. And then we give the proceeds to nonprofits, local nonprofits. So in the last 5 years, I would say we've probably given $500,000 to 50 plus local nonprofits. So we have a heart to give. Mr. Roy Maynard, he's the Vice President Principal at Evan James Associates. He's been doing this quite a while. He went to Florida A&M. He worked for a luxury home builder. He has a minor in economics. He handles right now a lot of our acquisition disposition. He does a lot. His group inside our brokerage does a lot of property research management. And then he's also a partner in the upcoming Vertical Medical City project as well. And he also sat on the board for the Guys with Ties. We won a couple awards, YMCA Central Florida Volunteerism Award, Amy Van Bergen Generosity Award, just to give you an idea. Alan Abraham is also Vice President, Senior Project Manager. He handles a lot of build outs for our national tenants who build any franchisees who are building quick service restaurants, for example, or retail. He handles a lot of that. He's closed over 400 transactions, West Coast, South America, Canada, Israel. He also, his claim to fame is, and he'll tell you, he spent a lot of time at NASA. He made sure NASA was running properly, Seewing. I don't know if he's ever told you those stories.
Yes, he did.
How he paid. Oh, he did? I'm sure he has. He kept NASA, Boeing, and Lockheed Martin on their feet, on their toes. So to give you an idea of what he does. And now let's turn over to our advisory board of directors, and then we'll go through some past and current projects, and then we'll be done. We broke up our board into 4 different sections. We have attorneys and fund experts. We've got our architects and engineers, community stakeholders, and then leadership and entrepreneurs. But one thing we thought would be interested to show you is what is the collective experience of this group, along with our executive leadership team. As you can see, there is a tremendous amount of time that has been spent, generations, doing real estate project management or architects or public service or real estate corporate and contract law, 82 years. So this will give you an idea of the sheer amount of experience that our board and our executive leadership team brings to our fund. And just to give you an idea, these first 2 gentlemen alone had over 80 years of law experience. Richard has closed out $3 billion in elite funds in his career. He's a veteran M&A guy. Barry Miller actually owns the largest title company in the state of Florida, the closing agent. He's licensed to practice in Florida, New York, Massachusetts, and he's always ranked as one of the top attorneys in the state of Florida. Gray Dodge recently left as a policy director for the Florida Department of Economic Opportunity to start his own fund that specifically works on opportunity zones. So this guy, Gray Dodge, was one of the individuals that helped the governor of the state of Florida come up with the 427 opportunity zones. So Seewing, as you can imagine, it's almost like cheating when you have people who created these opportunity zones in our state who are literally our advisory board, right? It's quite the leg up versus potential other opportunity zones that may be out there. Dino Bolani, he's a wealth manager. He's helped thousands of people with their investment portfolios. He also has an import-export business that runs out of China, Hong Kong, India. So he's very versed in this type of thing. Now let's switch over to the architects and engineers. Gary Neal has been doing this a long time, master's in structural engineering. His firm, MAC Contractors, they build a tremendous amount of projects throughout the Southeast United States in different niches. Tabitha Ponte is a partner of ours in the Vertical Medical City project. She has her master's in structural engineering, and she's been party to probably at this point about $2 billion worth of projects in her career. They do a lot of healthcare at Ponte Health, healthcare projects. Juan Gimenoz with Tuache Anderson, which is a top 500 architect firm in the United States. He's master planned all over the world, from China, Dubai, UAE, Japan, Dominican Republic, Turkey. And I'll show you some of his projects here in a second. And he's completed, give or take, $4 billion worth of projects. Joe Neal, Gary's brother, he's got his civil engineering degree. He does a lot of the master planning for MAC. And for those who are from the Philly area, I'm sure you're very familiar with the Wawa convenience stores. We have a lot of them in Florida now, and their firm has built every single one of them, just to give you an idea. Pete Clark is a former county commissioner. He's recently ran for Orange County mayor. Literally, I think that race ended in November. He's got almost 30 years as a public servant. He ended his career with greater than 70% approval rating. He's a good friend of ours, and he is very well versed on the county and how everything works, being a former county commissioner. So he's going to help push through a lot of stuff for us. Camille Reynolds also worked for the government, city and the state. She has a lot of relationships. The Hannibal Square Community Land Trust still does deals to this day and works with the city, and you can always Google them. They do quite a bit. So we're excited to have her on board. She's excited as well. Bakari Burns, he's the CEO of Healthcare for the Homeless. Because we have a triple bottom line, we wanted to make sure that we had folks on our board who have the pulse of what's needed in the marketplace. He's got 2 master's degrees. He deals with behavioral health and counseling. He'll be a great asset when it comes to building affordable health care, which the state of Florida needs direly, actually. So we'll be doing those type of projects, and he'll be very helpful there. And then Chris Castro, he's the director of sustainability for the city of Orlando. He's the mayor, the city of Mayor Buddy Dyer's go-to guy when it comes to sustainability. And they actually won a 2018 Public Official of the Year award through Bloomberg Philanthropies. Mayor Bloomberg was actually here about last month, and he was with Chris Castro and Mayor Dyer because Orlando won an American Cities Climate Challenge contest, which we thought was pretty cool. And then more leadership and entrepreneurs. We've got Antoinette Forbes. She's the CEO of the African American Chamber of Commerce, and she's been party to hundreds of millions of dollars worth of deals. She served at executive levels for quite some time. She's very well versed across the state of Florida on how to do stuff like this. Dr. Roberts, he's an advisor to world governments. He literally just got back from China at the end of 2018, where he was advising the Chinese government. He spoke at Tiananmen Square in the People's House. He also has been spoke at Harvard University. He's been a keynote speaker for Bloomberg. He's a good friend of mine. We sat on boards together in the past. So he's excited to be a part of this as well. Dak Votts with Batson Construction. Right now, we have a huge 68-acre mixed use going in downtown Orlando called Creative Village. And Dak is the guy who's actually building, which I'll show you in a second. He's building the housing project for University of Central Florida downtown. And he's been at this point, he's done about $1 billion worth of projects in his career. Michael Brown, he has a very large workforce. He holds multiple patents. He's revolutionizing the industry in terms of washers and dryers and household products. So kind of gives you an idea of our advisory board of directors. Seewing, do you have any questions before we go into projects?
No question. Very, very impressive team. So very reassuring. Thank you.
Good, of course. All right, so this is a short list of not only past projects that already exist, but current projects that are happening, whether it could be the executive leadership team in-house or advisory board members are working on them. So top left corner is the Lime Garage. It's at Disney Springs, which is part of Walt Disney World here in Orlando. One of our board members built that. The one in the bottom left-hand corner is the actual student housing project I was just telling you about. That's the conceptual rendering of it. It's about 70% done at this point. So they're getting pretty close to looking like that. On the right-hand side is the Medical City project that I was telling everybody about in downtown Orlando that Roy I and Tabitha Ponte are doing. We've got a couple other Ponte Health projects that are healthcare related. We've got some VA hospital down in Tampa. We've got some retail. And the bottom right-hand corner, I was telling you, is a project, a master plan in Dubai that one of our board members completed. And then we've got some hotels on the beach, inland. I'll go back. All of these have been completed by someone on our team. We've got some retail. We've got the Wawas I was telling you about. We build a lot of checker stores for clients in the Southeast United States as a brokerage. Do a lot of medical buildings, assisted living facility in the bottom right-hand corner there. So that kind of gives you an idea of the projects that have already been completed by our team members. And in terms of the bottom line, we're looking for accredited investors only, $50,000 and up to start. The fund will close out once we raise $125 million. Our guess is that'll close out pretty quickly. One of our competitors in Chicago closed out a $100 million fund in about 36 hours. So if you're interested in this, definitely get a hold of Seewing as soon as possible. He can introduce you to us at a more in-depth capacity. But our board's got 400 years of experience. We've got third parties set up, so you don't have to worry about the documents or updates on the fund. They'll handle all that for you. But I would encourage, if you're interested in being a part of this fund, to move quickly because it's going to close out fast. So, Seewing, any questions?
One quick question. Even though I have several questions, I think I don't want to make this too long a presentation. You've been very, very thorough in your presentation. So my one quick question is, if an investor were to put in, if a qualified investor would put in 50 grand or more, how will their money be invested? I mean, in what allocation, or are they buying like a mutual fund shares, or like fractional shares of a small ownership on each of one of those projects? How are their money being divvied up on?
Yeah, to answer your question, it's being divided however it's at that given time. And so it's $100 per share. So in essence, they own 500 shares for their $50,000 in the entire portfolio. So they're going to own a portion of everything that we do, whether it's the student housing, whether it's affordable housing communities, whether it's retail strip centers. They get a piece of everything that we do and all the returns.
Yeah. The follow-up question is, how are the investment being tracked from quarter to quarter, semi-annual, annually? I mean, I know the investor is going to receive a statement just like any other syndication or REIT or REIT REITs or mutual fund shares. So how does a particular investment over time will see the value, hopefully, of their investment grows? I mean, what written or what quantifiable numbers or provided? Yeah.
So you want to have an idea of what the returns are?
Right.
So we're offering 8% preferred return, and then 80% of all the net profits that the portfolio and the fund brings is going to go back out to our investors as profits. So in answer to your question for the opportunity zone, the goal here is for everyone to put their money in and leave it for the 10 years, because then they don't have to pay any capital gains. It's a zero basis. So if you like the returns that you're getting, there'll be quarterly statements from our CPA, Vestal and Weiler, our CPA firm, that'll be given to anybody who has money in our fund, and they'll be giving updates to everyone specifically as to what the fund is doing and where your money is at and what's the projects that are being completed, where they're at in the stages. We'll be giving reports on a quarterly basis to everybody, and they'll also be issuing any IRS tax documents that the investor needs, that your investors need. They'll be handling those as well. Because we won't be doing that personally. We don't have time. We're super busy with all the projects and our regular brokerage. So that's what they're there for. I hope that answers your question.
Yeah, one quick follow-up question is that if any investor, for whatever reason, they want to exit before the 10-year mark, so there will be no early withdrawal penalties or any type of fees other than small fees. So whatever liquidation they wish to address, whatever the amount of liquidation at a certain point in time. They hopefully they'll have to pay taxes on it and what have you, because they have so just like
to answer your question, this fund is going to do so well that we're willing to buy back the shares from any of your investors Now, obviously, what they won't get is they won't get the tax incentives of the opportunity zone because I believe it's 5 years, 7 years, and 10 years, and
Right.
the basis goes down. So if you leave it for 5 and you want to leave it for 10, you're still going to save money on your capital gains. And if you get out before that, then yeah, we'll work with you to make sure that you get your money back. So
Good,
our
good.
goal is,
Yeah,
yeah,
go ahead.
we'll personally buy it back.
Wow.
I don't
Well,
mind
yeah,
taking more shares of the fund.
I hear you. Okay, what I hear you saying that even, the way I look at it, having heard your presentation, which is outstanding. So even if this is not a opportunity zone, even there were no future tax benefits at the 10-year mark, I mean, the fundamentals itself, the type of project you're doing itself, from a pure fundamental investment point of view, is it has a lot of attractiveness to it. So when you add on the tax benefit, it's just in my opinion, is an icing on a cake. You know, right?
Yeah, no, I agree. It's very much like what you've seen, and because we're a brokerage, and that's really the key here, is because this fund is based around a commercial real estate brokerage, which we do deals all day long. We have relationships in the marketplace, left, right, and we have a stack up from here till Sunday. So because we're a brokerage and the fund is based around us, we understand the fundamentals. We know how to do deals, and we know how to get the best everything for our investors. So yeah, no, this is going to last for quite some time. I hope that answers your question.
Yeah, yeah. And my next question is, even though, technically speaking, this opportunity zone tracks, if you will, whether it's located in Florida or any of the other remaining 49 states, supposedly,
Mm-hmm.
quote unquote, they supposedly are low income communities or stress type of locations. But if you think about it, the areas that you guys have in place in various areas of Florida is not really. I wouldn't even consider a distressed area because is your projects are located in a path of growth. Uh,
Mm-hmm.
Technically, it is an opportunity zone according to IRS. But if you think about the path of growth and the project that you're doing is really, I mean,
So
I could say
I,
is a great location. I mean, above and
I would
beyond.
say I would say of the 12 projects that we've chosen to start with, about 8 of them we would have done whether or not they were in an opportunity zone or not. That
Oh,
is inconsequential to us because they are in the path of progress. The returns are great. So yeah, to answer your question, yeah, I mean it doesn't have to. The opportunity zones. I don't know who drew up these lines, and it doesn't really matter at this point. But it's done, and they, 80, 70, probably 75% of the projects that we're going to move forward on are not in distressed areas for the most
yeah.
part.
Wow. I mean, I couldn't say it better myself. I mean, we're on the same page. I mean, uh, this is a tremendous opportunity. So 125 million dollars, if an investor would put in, 100, 200 grand, you're right. It only takes several hundred investors to max out on this fund. Then you're gonna close out this fund very fairly quickly. I agree with you.
Hmm. Yeah, we will.
Yeah. Yeah. So the call to action, again, Jeremy, yeah, once I put this out to my investment group, and this is require a lot of urgency. So first come, first serve, and I don't want to have any investors to miss out on this opportunity. Although your group, as we work together long term, we bring in
Hmm.
other projects, but this particular project at 125 million will be gone because there's so much interest. The demand for investors that want to invest in this fund has exceed the supply of this particular project. So the urgency is that any of my investors that are really want to get in, they have to pull the trigger quickly. Any other recap you want to do before I let you go, Jeremy? This is a tremendous presentation. I really enjoy your presentation. It's really meet our network's fit and criteria. and a business model. So we have good synergy moving forward. So can you provide a recap high level? Then we'll conclude this presentation, Jeremy.
Yep. I would say the takeaway is, again, like I talked about at the very beginning, was focus on going with a fund. If you're going to put money into something like this, they've got the experienced leadership team, they've got a board of directors, they have a why, an actual why of why they're doing what they're doing. We really want to help the community. We've shown that in our bios of how we've already been helping the community for 20 years. You know, you want to go with somebody who's focused on the environment and make sure that we're not tearing this planet down. And then not only that is, do the projects have good returns? Are the people, the general partners, which is us, are we negotiating the very best deal, not only for us as general partners, but for our investor class, which those are kind of the criteria that I would say as a high level, just to kind of circle back from the very beginning, you got to look for those things. And if you have them, go with it. Don't look back. Enjoy your returns. And, you know, see you on the beach sipping a colada in 20 years.
Just contact myself. All of you know my contact information. I'm very, very accessible. I'm very reachable. For those investors that are serious, that want to take the next step, contact me, and I will, you know, do my consultations, strategy session with my investors. Then if I determine that particular investor are ready to go, I will pass on my investor to your team, Jeremy, and then your team will do all the rest of the paperwork to make this happen. Am I right?
Yeah, absolutely. We encourage you to just reach out to Seewing because we're pretty busy, so it's easier if you just contact him if you're part of his group, which everybody is. Make sure that he's having that conversation. If you want a private conversation, he can arrange that for you. And then the next step is, if you're still interested, we've got a PPM, which you can review along with your accountants and your attorneys. We've got subscription documents. And then the matter of just signing them and then sending them in, and then we're off to the races. And we've already started, so now's the time to act.
Sounds great. So Jeremy, you have any last minute questions? Otherwise, we're done.
No, I think we're good. And Seewing, I really appreciate you having me on your show, on the call.
Thank you so much, Jeremy. Thank you. Looking forward to doing business with you, and a very, very exciting opportunity. Thank you so much, and have a nice day, and look forward to it. Thank you.
You too. All right. Thank you.
All right. Bye-bye.